morning, everybody. It's Christian from Serene Education with the four majors and the last update for the 24th of May 2013. Okay, let's have a look at the four majors this morning on the FX8 template, starting with euro against US dollar. Wow, what a mixed bag. Yet another day yesterday of a hell of a lot of news, and we had some really strange outcomes yesterday on price action. Here on the euro, you can see quite clearly in the daily, we had a bearish engulfing candle on Wednesday, followed by yesterday's candle of bullish engulfing at the same area. And you can quite clearly mention, I said that we had 1, 2, 3, we had almost 5 days of support here. We need to see a break of that to see price really moving towards that 1275.50 mark. That failed to materialize, as we saw euro gaining strength yesterday, as the US dollar lost ground against most of its currency, its cross pairs. And what it's done now is it looks like we've actually seen euro posting a near-term support now, just short of the prior long-term support. So as it stands at the moment now, we're looking at price actually moving higher on the Asian session, and as it stands, we're looking to see price moving towards its prior consolidation area here in the shape of the previous support and resistance level around the 12.9785 mark. So we need to get above that. You can see all the moving averages are still above price, acting as resistance. Our RMO is still below the zero line. MACD is still below, but you can see prices consolidated back towards the zero line. And most of the sentiment in our intraday looks at one of buying, and our long term is still looking very much negative. So as it stands at the moment now, we are trading. It is a Friday, end of week. We have seen a lot of news out the past couple of days, and you can see prices now potentially looking to trade back into a current support and resistance. So we've had some really mixed figures. Talk of Fed government starting to thinking about trying to stem back on their quantitative easing QE3, and it's actually shaken the market in so much that we've actually seen a lot of volatility the past couple of days. So as it stands at the moment now, we're seeing euro and a pullback. Let's just go to a 4-hour chart. You can see quite clearly a support area here. You can see the MACD has jumped above the zero line, and the RMO has started to make its way back towards the zero line. The thing to remember here is the intraday. You can see the institution is still above price here on the 4-hour time frame. We would need to see price trading above the 23.6 to be one of positive long term, and if we get above that, then we should be looking to the upside back towards these areas here. The main support and resistance level high, roughly around the 1311, 1400 mark. So as it stands at the moment now, we're in consolidation, end of week. It'll be very interesting to see how much more sentiment we have today, but as it stands at the moment now, we're seeing very indecisive change, and that's coming at a price support and resistance level here. Quite a noticeable support for euro, so be very wary about trading speculation this morning or this afternoon. End of week, we could see people starting to consolidate their profits, and we could see another day of indecision. On to sterling. Here again, we had Wednesday, bearish engulfing candle, breaking this current support and resistance, looking to head towards that magical 1485.00 mark down the bottom here. And you can see the RMO and the MACD really complementing that negativity. However, you can see that we have a mixed bag over here. We have quite a lot of blue on our smaller time frames, and that news that's come out midweek, Wednesday and Thursday, yesterday in particular. We're seeing a lot of indecision now relating to the Fed announcement, thinking potentially in the forthcoming months to start easing on their quantitative easing, and that's left a bit of a bad ripple on the market. And you can see sterling, as we stands now, is in a pullback, and as it stands now, pullback, and it looks like we could see price returning back towards this prior consolidation area here in the shape of the 15.198 mark. Intraday, very indecisive. The markets are a bit jittery at the moment now because of that news. Speculation is running rife. They're worried about this quantitative easing. The Fed, the Fed government thinking about actually starting to ease down on their quantitative easing, and that's pretty much really scaring people away, and people getting a bit jittery because of that. And you can see here on sterling, price pointing back. It's still negative nonetheless, but as it stands now, we are looking at potentially price consolidating. Notice all the moving averages on our 4 hours still looking negative. The institution still above price. On this particular one, the moving average and the RMO are still still moving together. It's just that we have a lot of indecisiveness here on our shorter term time frames. At the moment, sterling still looking negative nonetheless, so just be aware of it. Very, very speculative markets at the moment now. Do you want to trade that? It's entirely up to you. I'll rather wait for this week to concur, finish, and then see what price is doing at the start of the new week would be my better bet. US dollar Swiss franc. Here trading into a major support and resistance fib retracement here in the 23.6 mark at 97.21 on the monthly, and we saw this huge bullish engulfing candle on the Wednesday, followed by yesterday's bearish engulfing. So this is almost a tweezer top at a major resistance level, and it could be a sign of negativity for the US dollar against the Swiss franc. You can see there seems to be a lot of negativity on our intraday time frame, still positive long term, but a lot of negativity eating at price on intraday, and you can see this occurred yesterday. Could this be a tweezer top at a major support and resistance level here in the shape of the 23.6 Fib retracement area? If that is the case, then we should be looking to the downside for the foreseeable future, back to price support and resistance level highs here at roughly the 95.29 mark, thereabouts. So as it stands, we're looking at potentially a move of roughly 130 odd points to that particular point, but it doesn't look all that good at the moment now for the US dollar or the greenback, as we see a lot of uncertainty because of what the Fed announcement had to say over the past couple of days. So as it stands at the moment now, looking potentially, the candlesticks are looking potentially negative in the setup for this tweezer top formation. Look for price to maintain below this 23.6, and then we should be looking for shorting opportunities for the new week next week. Last pair of the day, the US dollar Japanese yen. Here again, green. Let me just zoom in here so you can see it. A lot of hesitation here at the top side. Price unable to actually break these highs here at 103.26 over the past couple of days, and in doing so we saw a lot of indecision, especially with the greenback against the yen. And you can see what's happened here. We had this almost a negative candle set formation here, consolidating. We had a lot of trading range yesterday, I think sucking a lot of people into this trade. However, you can see the Asian session, we've seen a sell-off. The greenback against the yen, the Bank of Japan continuing with their quantitative easing purchasing. But however, the Fed actually being quite doverish on their quantitative easing. Talk out there that they're actually going to start pulling back on the amount of money they're pumping into the system, and that's really left the US dollar reeling. And sure enough, you can see the US dollar has fallen back. The Nikkei is actually fallen 225 pips. The Nikkei 225 hasn't done all that well. So very, very scary, bearish, speculative markets at the moment now. If price can actually close lower than this consolidative range, we should see price moving even further back towards this price support and resistance level high here. And if you look at where price is trading right to this area here, you're looking at about 180 odd pips to this level. Here you can see very mixed bag. Negative sentiment coming through most of the time frames, but primarily happening because of the fact of all that negative, all that speculation, that very doverish figures that come out from Bernanke midweek relating to QE2 or QE3 apologies figures. So as it stands at the moment now, we're seeing price pulling back, and if that happens or continues to be the same, then we should be looking for price to consolidate or to the downside. And our first target would be these prior highs we saw here, which is back at the 50% Fib retracement area from our monthly highs. So as it stands now, things not looking all that great. A lot of speculation out there. I'd rather just see how things happen today. It's end of week, so a lot of people are going to start looking to take profits or consolidate their profits. So it'll be interesting to see how much movement we actually see today. However, a lot of speculation this week. I'd rather let the market have this week, get over and done with, and have a look and see where price is genuinely looking at for the following week, and then I'll take it from there. But as it stands, guys, please be wary of the speculation out there. If you are using this particular template, please back it up with sound money management rules. Follow the rules of the particular template and keep it as simple as possible. Otherwise, have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, you guys trade serenely.